Hello, I'm Finola from RaaS, and welcome to our 2023 Outlook series. In this session, we're focused on Amaero International, ASX ticker 3DA, which is focused on developing a $300 million titanium powder JV in the United Arab Emirates. And joining me today is the company's chairman and CEO, Hank Holland. Thank you, Hank, for joining me.
Thank you, Finola. Thanks for the interest in the business and the work that you've done.
You've made considerable investment in Amaero, having backed the last two capital raises, and are now holding just under 40% of the company. Of all the companies that you could have invested in, given that you were based in the US, why did you choose Amaero?
Yeah, thank you. So historically, we have been a private markets-oriented investor, mostly structured equity. And what we've tried to find are opportunities that have a number of common characteristics. Number one is we do not want to compete against institutional capital. And so in the US, that's a broader issue than perhaps it's here, given our private equity venture markets and the more robust small cap market, if you will. And so we really bring an activist investor perspective. Typically, that means active on a board as opposed to executive leadership as it's become in Amaero. We're looking for opportunities that have strong secular tailwinds. Tend to be a thematic investor from that standpoint. At the very same time, we can identify a catalyst. We think it's highly probable to create value in the business. And then lastly, that we think the outcome is asymmetrical in nature. All investments have risk. This one certainly has its own. And yet we think the upside is far, far greater than the risk of that investment. As you mentioned, we led the investment in May. And candidly, we made a lot of mistakes. I made a lot of mistakes, and I'll touch on those. And then in turn, we led a follow-up investment in November. The initial premise, if you will, of this investment was a growth capital investment. It was not a turnaround investment. And I fault myself. I personally have invested we've invested $17, $18 million. I personally invested a bit more than half of that. Got two great partners, Dr. Gordon Rouser and Bob Latta, who are also significant investors. The mistake I made, though, was I naively assumed as a public ASX listed company that we could and would rely on ASX announcements and public disclosures. And as a result, I didn't do some of the confirmatory due diligence I would have typically done in a private investment. And I fault myself for that, and it was a mistake. I also anticipated that there would have been more scrutiny, given that it was a publicly listed company, albeit a small cap, and holding management to the fire, if you will, on prior guidance. And there too, it was a mistake. Shortly, and I invested with a premise, back to this idea of catalyst, we understood that the company that had been around for several years was at the cusp of having significant revenue for the first time. And very shortly, this calendar year, in fact, would have gone break-even profitable. Within weeks of when we invested, we learned that the Victoria powder plant facility was delayed, and it became increasingly apparent probably wasn't viable. I received my director ID number and joined the board within a couple of weeks of that project or that announcement coming out, and quickly asked the board to go about a complete assessment of the viability of that project, the unit economics and sustainability of that project, which we did. And in a couple months, I became of the view that it wasn't a viable project. And knowing it would have a significant adverse impact on the stock price, still felt the right thing to do was to be very clear with the market. I felt the company had made a mistake. I felt the company had given guidance, if you will, that was very unlikely to be realized. And as an investor, one of the things that I think investors have come to realize about me is, we will make more mistakes, I promise you. And yet we will be very transparent, we'll be very candid, and we'll be critical in our approach, and we'll be critical of ourselves. And I joined the board shortly thereafter as executive chairman, came out very directly, announced that we are canceling that project full stop, took a restructuring charge with anticipated costs associated with that. About 4 weeks later, the board announced I was taking over as chairman and CEO, and that we were doing a follow-on fundraise of $10.5 million. It was very important to me that we gave all of the shareholders, who for the most part had a very poor experience with this business, the chance to invest alongside us. And thus we structured it as a renounceable rights offering. Not only did we give all the investors a chance to participate in the rights offering, it was renounceable. In addition to that, we gave them a chance to oversubscribe. And yet I committed that Pegasus and myself would take 100% of the shortfall. Of the $10.5 million financing, I believe we ended up taking about $9 million, $8.5 million. And thus today, as I said, $17.5 million invested. At the very same time, I announced we were pivoting to the UAE. We have another business in the UAE that's a very, very visible business called W Motors. W Motors, not to bore you on that, but of interesting things, we have a long-term contract to replace a significant amount of the Dubai police fleet with a modern patrol car that we've developed. It's a very visible company and a very visible project. And because of that, its founder, Ralph DeBoss, I've developed some very interesting relationships in the UAE, and that led me to think that perhaps that would be a better market to pivot the powder manufacturing facility. Better for two reasons, one of which is from a national strategy standpoint. I could not be more impressed with the UAE. It really, it reminds me, as you study the investments that Europe made post-World War II, you study the investments the U.S. made in the 50s that were transformative, long-life capital investments. And unfortunately, the U.S. today, look at our airports, look at our highways, look at our aqueducts, look at our power grid system. You know, we have a dilapidated capital infrastructure, and we haven't made those investments for decades. The UAE is aggressively making these long-life investments. Part of it's transforming from a carbon economy, and part of it is with the ambition to be a geopolitical, consequential, significant economic power in the world. And it's very, very impressive what they've done. And so we have purposely aligned our project directly with the national priority strategic initiatives, advanced manufacturing, advanced materials. I see Amaero going forward as being more of a materials company and less of a manufacturing company. We'll be manufacturing powder, right, which is the high value input for 3D manufacturing. We'll continue to do commercialization and prototype development. We will not be in the equipment side of the business, which we've already exited. And to the extent we have commercial clients that want us to stand up some commercial production, perhaps it won't be our focus. The real opportunity, getting this first project done, which as you mentioned, $300 million we've announced. To be clear, and I want to make sure that we're giving our best thinking, if you will, to investors going forward. In aggregate, it will end up being a much larger investment than I feel as we go about vertically integrating the titanium supply chain. How we phase, sequence, scope that is still a bit in progress, right? The most important thing, and I've committed to the market, and I think it's achievable by the end of this current quarter, the March quarter, that we should finalize the funding and the scope, is to launch what I'm calling the demonstration testing and training facility to land the first atomizer, gas atomizer, which has been completed in Europe. At capacity will produce a bit over 200 tons of titanium powder. And we need to apply for a new export license instead of sending that to Amaero in Australia, send it to the UAE and get that on board as soon as possible. That first atomizer that we can then use for testing, demonstration purposes, training purposes for the second, third, and fourth atomizer. We'll immediately order other atomizers. It's about a 16-month construction process. So the second atomizer, we wouldn't land until late calendar year 24. And then imagine every 6 months, thereabout, we bring one on. The guidance I've tried to give the market, and I typically would not give this guidance other than the fact that I wanted to make sure that we kind of redirected prior company guidance, if you will. We've said explicitly we will not be cash flow break even calendar year 23, calendar year 24. And again, I want to be clear in that some former guidance was given different than that. We ended the year with $13 million of cash, and yet we've paid almost $5 million for the current atomizer, which will come back to us when it's funded from our partner. We've actually got an R&D credit we'll be receiving next month. On an adjusted basis, we begin the year with about $19 million cash. We have not disclosed our working capital burn rate, and to some extent, some of this will depend on, again, how we scope with our partner. I've said in the recent investor briefing, I do not expect we will need to raise capital this calendar year. And I think there's a real good chance we'll get to the end of next fiscal year before we go raise additional capital for working capital. Given the phase of growth where we are, that's a long time from now. And I would expect we'd be a very different company with a very different market cap between now and then.
Now, you've worked incredibly quickly to establish the JV with Rabdan Industries and its parent, Amaero Holdings, which has a considerable presence in the UAE. And Rabdan has committed to developing and delivering the capital for the project. Does this include debt funding? And if so, will it be non-recourse to the JV partners?
So initially, and again, the aspirations are much larger, and we'll get into as far as the downstream vertical integration of titanium. Initially, the plan is, and let's look over, say, the next 3 years from a working capital standpoint and a CapEx standpoint, that our partner directly or indirectly, and what I mean by that is Rabdan itself will write a check for 100% of CapEx, and/or, which is more likely the case, they will facilitate introductions of strategic funding sources in the UAE, of whom they are indirectly related. Tawazun Economic Council, Abu Dhabi Investment Office, Mubadala, whoever the case may be. And in turn, those organizations could also involve offset funding from obligors. Would provide capital either on a non-equity basis entirely, so really viewed as economic development, advancement of strategic priorities, and or if they required equity, it would be taken from Rabdan's 50%. So in either scenario, it would not impact Amaero's 50% of the venture. That's CapEx, and that would be equity funded. Okay, of this first phase, which again, $300 million is what we've announced. It could well be a series of projects, or it could all be the $300 million. Regardless, it'll take a couple years to land that equipment. On the working capital side, we've committed a 50-50 fund on a pro rata basis, working capital. I made an earlier announcement that we expect the working capital not to exceed $50 million over 3 years. I think that's excessive, if you will. I don't think we're likely to need that much capital. If we did, okay, and by the way, I don't think it's particularly excessive, so let's just assume that's the right number. If we did, that $50 million, our half would be $25 million. I mentioned a moment ago, we have essentially $19 million on an adjusted basis. So the great way that we've structured this is we do not anticipate a dilutive capital raise as necessary. That would be all equity. And then downstream, whether it's subsequent working capital or whether it's other projects, we would have much more flexibility to the extent we want to turn to the balance sheet and do some debt financing as well.
Now, you've provided some early estimates on the unit economics of a single gas atomizer, including a fairly rapid payback period of 2.3 years based on an average titanium powder price of $160 Aussie per kilo. Part of the thinking behind the titanium powder operation is to capture some of the grade 5 aerospace market. Is there significant additional investment to do this?
Yeah, let me unpack that and add some tangential things as well. You're exactly right. The benefit of our IGA inert gas atomization technology, coupled with Amaero's process optimization, is it's been our experience with the equipment and the testing that we've done so far, and we expect that it will be the case, that we'll have a materially higher yield of high-grade titanium powder. Typically, that would be considered both grade 5 for aerospace and defense purposes and grade 2-3 for medical purposes, biocompatible. We expect the industry today is plus or minus 35% yield. In small batch production, we're getting north of 60% yields. What we've assumed going forward is a 50% yield at a commercial production level. And I don't think it's overly conservative, but I think it's appropriately conservative. The 160 average, think of this as a matrix, if you will. We have interest for forward offtake contracts. Obviously, they would be a discount to the current spot price and the expected future spot price. Given the supply demand, which is currently roughly in balance, but given that demand is growing at about a 15% CAGR, it's expected that there's going to be more demand than stood up supply, particularly when you look at provenance. Provenance meaning take China production out, which tends to be lower quality, not suitable for these high-grade purposes. Take Russia out, given the geopolitical situations. Not that there's much powder production in Russia. It tends to be lower down the supply chain. I think we'll have strong spot demand. The way I think about position, and it would not require any additional capital. So the facilities that we have in place, the technology that we have in place is well suited for that production. At scale, part of the benefit that we can do is to have revert technology to recycle scrap, as well as recycling technology for the argon gas, which is the second largest input behind titanium ingot. And so at 800 tons, which would be the 4 facilities, we'll have scale to do some things that very few other producers in the world are doing. If you look where in the world is our example, it's Canadian producers. Canadian producers today are the highest quality, best positioned cost producer. It's primarily hydropower electricity. This is an energy-intensive process, so very important to have competitive power. It's a plasma manufacturing process as opposed to our IGA or inert gas process, atomization. It's wire feedstock as opposed to wire ingot feedstock. But they have been a very high-quality, reliable provider to the U.S. market as well as to the European market. Not only do we have the secular demand of very strong AM growth, on top of that, the European market is growing as fast, some feel faster than the US, given its strong commercial aviation, Airbus, its strong medical side, the Strykers of the world. And yet, if you think about half of their current production is sourced from production inside of Europe, notably Germany and Northern Europe. And yet, we all know what's likely going to be happening to energy prices long term on the European continent. Right. And so for us to position ourselves as a proximate producer to Europe at a much lower cost basis than they can be in, given our low energy cost, and given the active seeking of bilateral trade agreements between the UAE and Europe, I think it'll position us really well there. So the $160, I don't think it's overly conservative, but it's a mix of grade 5, grade 2, 3, and other. It's a mix of offtake versus spot. It's a mix of provenance supply. We'll have a limited amount that we will use U.S. allied provenance feedstock, which gets the premium for certain defense applications. Most of what we're doing, I would think of as not necessarily allied feedstock, but non-China, non-Russia feedstock.
Well, thank you, Hank, for joining me today. I'm looking forward to catching up with you through the course of FY23 and beyond to check on Amaero's progress.